Welcome to AI Mortgage News. It is Friday, April 24th at 4:02 p.m. Eastern Daylight Time. Today, the bond market finally broke its streak of trading strictly on geopolitical headlines, and the result was a much-needed rally for interest rates. While we have seen intense volatility all week, Friday brought a shift in a much friendlier direction for borrowers. The day started with headlines suggesting improved prospects for peace negotiations over the weekend. High-level representatives from both sides are reportedly meeting in Pakistan, which provided an initial boost to market sentiment. But the war headlines only get part of the credit for today's movement. A major domestic development involving the Department of Justice caught investors by surprise. News broke that the DOJ has dropped its case against Powell, clearing a major hurdle for a Warsh confirmation. In the eyes of the market, this significantly improves the odds of a rate cut in 2026, even if the shift in expectations is only slight for now. We saw the 2-year yield rally much more aggressively than the 10-year yield, which is exactly what happens when the market starts pricing in future moves by the Federal Reserve. Let us look at the intraday timeline to see how this played out. At 8:49 a.m., the market was roughly unchanged, with MBS up just 2 ticks and the 10-year yield sitting at 4.321%. By 9:40 a.m., we saw a dip into weaker territory, as the 10-year yield climbed to 4.338%. However, the momentum shifted back at 10:19 a.m., following the DOJ news. The 10-year yield hit its lows of the day at 4.303%, while MBS jumped up 6 ticks. We held onto most of those gains through the afternoon. By 1:19 p.m., the 10-year yield was steady at 4.311%. This is a pivotal moment for the mortgage industry, as it proves that domestic policy and Federal Reserve expectations can still move the needle despite global uncertainty. If you are looking to lock in a rate, today provided a rare window of stability in a very rocky month. Stay tuned to AI Mortgage News for the latest updates on how these shifts impact your bottom line. Subscribe now to stay ahead of the market.